India's stock markets have opened for trading this morning. Suyash, talk to us how Sensex and Nifty, which closed well into the green yesterday, how have they opened this morning?
So Krishna, both headliners continue to build on the momentum that we saw in the markets yesterday, and in fact we saw a good opening today where Sensex was up about 125 points or so in the morning trade, and it was just marginally below the 66,250 mark. Nifty also saw a rise of about 0.14% and was trading marginally below the 19,750 mark. The overall breadth of the market was also leaning towards the bulls. Around 1,500 shares were trading with advances, meaning they were trading in the green, whereas only 480 shares were trading in the red on NSE. Now the index has, both the indices have paired some gains since the morning losses, and BSE is currently trading around 0.17% lower, just above the 66,000 mark. Nifty meanwhile has slipped below the 19,700 levels.
All right.
And we are also seeing a spike in volatility. India VIX is up about 4.2%. Now this is expected because today is the futures and options monthly expiry, so perhaps throughout the day we'll see volatility being high in the market. Now talking about broader markets, Krishna, the broader markets were largely mixed today. The Nifty mid cap 100 was trading with moderate losses. Currently it is flattish. The small cap index, on the other hand, continued to build on the momentum. It was up about 1% yesterday. This morning, the last time I checked, it was up about 0.58% or so. And among sectors, let's talk about sectors as well.
Yes, of course.
So, IT and FMCG, which were actually the outperformers yesterday, saw some profit booking this morning. IT and the FMCG pack both came under pressure today, whereas metals and PSU banks, metals which also has seen a fair bit of run up in the last month or so amid expectations that perhaps Chinese economy will recover, they came under pressure once again once there were news that Chinese economy will perhaps not recover as soon as we were hoping for. So metal packs saw some buying interest at lower levels. It was up about 0.8% or so. PSU banks also build on the gains, but the private banking sector, Krishna, has continued to underperform the market and PSU banking pack as well, as we have seen, and it is weighing on the Nifty banking index, which by the way was down 3.5% yesterday, and it is perhaps the only sector which has not made fresh record highs in the recent run up, where we saw Nifty scaling 20,200 mark in a span of 5-6 days. It ran up about 1,000 points or so.
So right, so that's the broader markets and the sectors in action this morning. Suyash, they're wondering whether all that rally in mid-cap is sort of fizzling out. There's profit booking this morning on mid-cap stocks. We saw mid-caps and small caps up much better than Sensex and Nifty yesterday morning, and now there is it's flattish opening to the markets this morning, you would say, isn't it, Suyash?
Flattish opening to the market. It opened in the positive, but we have, as I said, volatility is expected to remain elevated.
It's triple witching
expiry.
day.
Yes.
It's triple witching day or the F&O expiry day, and those days always highly volatile as far as India stock markets are concerned. Suyash there putting it into perspective. Suyash, of course, all of this will boil down to the stocks in action this morning. We will talk about that, but before that, we have our special market guest joining us live this morning. We have Mr. Kush Bohra joining us live on this broadcast. Kush, wonderful to have you on the show as always. Look at what's happening with the markets. I mean, we were just talking before the show began. US markets mixed, European markets mixed, Asian markets mixed, Indian markets mixed this morning.
Hi, first up, good morning, guys. What fab energy, and it's so good to be back on the show. Well, it's not such a bad thing, really, if you ask me, and I'll give you a very simple reason. We've seen a sharp downturn from what 20,000, 20,100, 200 odd kind of levels. But for the last 3 to 4 sessions, we've held that 19,500, 19,550 kind of level for 3 to 4 sessions comfortably. Now, a couple of reasons why we are seeing a bit of a consolidation, at least today, is that, the Nifty is trading in a tight range between its 50-day moving average and its 20-day moving average. So that is, bound to play. Plus, if you see, I think the good old days of, volatile expiries where, a lot of traders used to do those hero zero trades on expiry, like all or nothing kind of trades. They're actually a matter of past because the option writing has actually increased so much that if you historically see the last 12 to 18 months, the expiry day volatility, especially the monthly expiry day volatility, is actually shrinking. So even today, if you see, we opened in the positive, the Nifty has gone down. But if you look at the options data, there's a very clear base at 19,700 on the downside and 19,800 on the upside. So I think that is perhaps where we should end. From the expiry perspective, give or take 50 points. Bank Nifty, I was listening to your conversation, and you're right. See, private banks aren't participating, and PSU banks are also starting to see some kind of profit booking. But the good thing is that some of these stocks are very close to their support levels. So a rebound on Bank Nifty cannot be ruled out from here, especially once the expiry hangover is over. Plus, don't forget that tomorrow's a working day, and then after that we've got the long weekend coming up. So perhaps one more day of consolidation and markets might move or give a clear directional play. Once the next proper week starts, and we've got some key data lined up from India and US. So I think some volatility will start picking up from next week onwards.
Right, including the industrial production data, IIP data that we're looking forward to as well. Starting with that, there's more data coming out next week as well. But before, Suyash has tons of things to ask you. But before we get to that, I have a quick question to ask. Yesterday morning when markets opened, you had both the Nifty and the Sensex down just about 0.5%. But whereas the mid cap and the small cap index were up 0.5%. And at the end of the day's trading session, when Nifty and Sensex ended 0.5% up, mid caps and small caps ended 1% up. But this morning, both the mid caps, especially the mid caps, is under pressure. It's flattish in the red. Small caps still continue to do well. Tell us, is there a story still there? Because some say these mid caps and small cap stocks are already overpriced because there's enough and more value buying has taken place in this space already that there is no more value buying, and probably there's time for consolidation and even correction in mid-cap and small-cap stocks.
Also, to add to what Krishna is saying, we are seeing that the number of stocks in the mid-cap and the small-cap, that were participating in the run-up, they have reduced. Now, less number of shares are participating. So, perhaps that adds to the argument that valuations, at least overall, look stretched.
Kush, your take?
So I'm happy when I hear this because the more the investor community remains cautious and conscious and afraid and worried about this space, the more it is going to rise. And let me just give you a couple of cases in point. About 18 to 24 months back, everyone was worried about the kind of move that we were seeing in the defense space. Even now, I think not too far back, just about a month or so ago, everyone was worried about the kind of move PSU banks and the entire PSE space has seen, and these stocks continue to perform. So one man's caution is another one's optimism, I suppose. See, I'm not too worried about this whole mid cap space being under pressure. Of course, there were a lot of stocks that were starting to run up. I mean, there were stocks that we'd not heard of in a couple of years' time, and they were starting to move. So I'm kind of glad that that reality check has come in. But for me, there are these select good stocks which will continue to do well. The froth is taken out, but that does not mean the party is over or the story is over. Even if I look at the mid cap index, the mid cap 100 index, it had gone into a bit of an overbought territory. The index is cooling off. But even that has taken support and starting to rebound. So this is a very stock-specific market right now, and as it should be. I mean, as they say, if your panwala started recommending stocks to you, then you should perhaps exit. And that is what happened. That is what was happening about 2 weeks ago, right? So I'm kind of glad that we are seeing a bit of a caution in this space. But for me, stock-specific action is a plenty in this, in the mid-cap and the small-cap space in particular. And I will continue to remain, a buyer on select names, of course.
That stock-specific action you're talking about. Before that, Suyash has something to ask on the broader markets per se.
Yeah, so Kush, last night we saw, in fact, over the course of the overnight, we have seen a 3% or so spike in crude oil prices. Now WTI is hovering around the $95 a barrel mark, whereas Brent is nearing $98 a barrel. Now we were seeing some sort of a pullback in crude prices, earlier in the week amid concerns that perhaps the economic recovery that we are expected to see from China is not going to come as early as the next few quarters. It will take some more time. Even there were concerns flagged by various analysts about US's economy and the situation. But now what we are seeing is that the inventories back in the US have rapidly fallen, and as a result we are seeing a sharp spike in the crude. How much of an impact do you expect the spike, the recent spike in crude to have on the Indian markets.
Also, just to add to that, there is so much talk of a possible massive production cut, a possible one. There is no confirmation on it. Russia and OPEC already have a 1.3 million barrel per day production cut that is ongoing, and we hear that there is a possibility that that 1.3 may go up to 4 million barrels per day of production cuts. Crude is on the boil is an understatement over here, isn't it, Kush?
Oh no, it is. But I think the fact that see, if I look at it from a slightly different lens, right? We did enjoy a lower priced crude, especially from Russia, for a while now. So I think the coffers are fairly full. I'm not saying this is not something to worry about, and you're starting to see some kind of an impact on, let's say, the paint stocks or the tire stocks. So I would definitely be watchful. But the near-term impact for this cannot be ruled out for sure. But look at it in the long run. We've always spoken about the currency depreciating or the crude price going up. But the markets continue to do well. So from a long-term perspective, I'm not worried. From the near-term perspective, let me also bring in one angle, which is we're staring at elections. We don't know, maybe 6, maybe 9 to 12 months down the line. So the domestic impact may not be as much, at least from the inflation perspective. And as long as that is taken care of, I think the economy should hold in good stead. The only impact that I see could be, let's say, on the OMC stocks, on the tire stocks, on the on the paint stocks. So some of these might get impacted. But right now, just about yet, I'm not worried. See, even RBI had a benchmark number of, I think, about 85 to 90 in their calculations, and we hovered around that for a very long time. Once we breach maybe 100 is when the alarm bells will start ringing. But as I said, given the election year, the inflation impact of this price rise may not be as much on the economy, and that is perhaps a silver lining in all this.
Okay, fair enough. Silver lining. We always keep looking for silver linings here on Business Plus. Stay with us, Kush, because we're talking about stock specific. We're going to get it to our stock specific action. Suyash obviously has a list of stocks in action in trading this morning.
Krishna, let's talk about Vedanta first. Vedanta has been in the news for quite a while now. Yesterday, we saw that Moody's downgraded the corporate family rating of Vedanta Resources, which is the parent company of Vedanta Limited. As a result, the stock declined as much as 8%. It ended 6.7% lower in yesterday's trade. Now, some good news coming in for Vedanta shareholders this morning, and the stock was also up about 1% in the morning. Now, Vedanta is reportedly looking to demerge its businesses into several listed entities. Now, the expectation is that businesses such as iron ore, oil and gas, steel, aluminium will all be listed separately. So, I mean, when we see a demerger, it's largely seen as a value unlocking exercise, and perhaps that's why we are seeing a 1% jump in the Vedanta stock. But to that, I want to add that Vedanta stock is currently trading at a 14-month low. It's it has wiped off immense value from the investors. This year or so, it is down about 35% or so. So, Kush, how is the stock looking on the price chart?
Kush, any silver lining there for the Vedanta stock per se?
Look, you're talking to an Indian cricket team fan. That I think by definition implies eternal optimism. So I won't rule out any kind of up move on this from a very simple reasoning. See, the stock's actually been a great value destructor over the last 12 to 14 months or so. But the only silver lining that I see here is the fact that it's now reached an oversold territory. So a technical rebound cannot be ruled out. Plus, given the kind of news flow that's coming in, perhaps the stock might see a bit of an upside from here. But let's be a little practical. If I were to invest in this stock, then I would have a very small quantity placed just as a tracking stock, as a tracking quantity, just so that if the stock does slip further from here, then I won't be losing too much. It will probably not pain as much. So if I were to venture a trade into this, I would actually do it with a very small quantity. The stock's gone into an oversold territory on multiple time frames, across all time frames actually. So a technical rebound can't be ruled out. Structurally, maybe it'll take some time before the stock sort of gives a lot of comfort to the investors or trader community as a whole.
Okay. You're talking about Indian cricket team and internal optimism. I come from Chennai. I'm Chennai Super Kings. We're the king of comebacks. I also harbor enough and more internal optimism. But quickly take us to the other stocks in action this morning, Suyash.
Certainly, Krishna. So Dixon Tech was another stock that was in the news, has been in the news for quite a while. Last week we saw that Dixon Tech is perhaps going to set up a phone manufacturing unit near Delhi, and for this it will invest about 400 crores or so. Now this was last week's news. As a result of that, the stock was up about 10% or so in the last 5 days, and it has been performing quite well on the daily as well as the weekly charts. But now today there was news that Xiaomi, both Dixon Tech and Xiaomi has entered into a manufacturing agreement where it will produce smartphones for Xiaomi in its manufacturing facility in Noida. And the stock has not seen much reaction. Perhaps we are seeing, the rally that is kind of fizzling out. It was down about 0.2% or so. So, Kush, how is the stock looking? Has the rally fizzled out? Is there some buying opportunities? At what level would you be comfortable entering the stock?
Right?
Dixon Technologies.
Yes. Dixon Tech.
Well, yeah. See, it's actually a stupendous move if you see after the after all kind of negative news that we had seen for the last, I think, about 8-12 months in the stock. But the recovery also has been equally phenomenal, and now the stock is approaching its all-time high levels of about 6,000. I know it's a little way away, but if we look at the whole scheme of things, given that the stock has rebounded from 2,600 odd levels, this recovery is quite phenomenal. So if someone's got a positional view on this one, I'm not too worried about this stock going down, because it's made a firm base. Even the rise, even though it has been quite sharp, it's been with a set of pauses and set of accumulations and the fair share of dips. So I think from a positional perspective, I won't rule out a move to 6,000, the lifetime high for this stock. If a fresh entry, someone's looking for, then I think 4,800 is it's a neat stop loss that one can have. But given the overall momentum that we are seeing and the first the stemming of the negative news and now the flow of positive news on the stock should perhaps just push it a little higher from here. So overall setup to me now actually starts looking positive.
Okay. I also noticed a couple of ultra blue chips in your stocks in action this morning. One is RIL and the other is Infosys, isn't it, Suyash?
Yes. So RIL was in the news, and it has been in the news because of the spate of investments that we have seen it picking up for its retail arm. I think there's also talks about it getting another investment to the tune of 600 million
from the Gulf again.
From Gulf, but the TRAI data is also out, and Jio has added about 40 million users in July vis-a-vis June, where it added about only 22.7 lakh users. The market share also is inching towards that 40% mark. It currently stands at about 38.6%. But we are not seeing much of action in the stock prices, Krishna. In the last 16-17 months, the stock, it seems to be stuck in that range of about 200 points, where it goes down to 2,300, bounces back to 2,500.
Kush, is RIL a defensive play at this stage? Because not it does, it's still moving in within a range for the last 18 months. It looks like an FMCG stock.
In fact, some FMCG stocks have done better. But yeah, if I include the 200 rupees of Jio, the stock's actually not doing that bad. It's still at about 2,600 kind of prices, right? But post the Jio financial services demerger, if you see, the stock has been in a bit of a downtrend. Now, this has not always been a trader favorite counter, so to speak, right? It's been more of an investor counter. It's been a positional play. Now, from that perspective, if you have a horizon of, let's say, 12 to 18 months, this may not be a bad time to start buying into this stock, because even historically, if I just don't factor for the Jio financial price just for now, these are the levels where the stock had consolidated about 2,300 to 2,350. The stock had consolidated for a while before it started to make that move towards 2850 kind of levels. So look at it as an SIP opportunity. Have an horizon of 12 to 18 months and perhaps start accumulating. From a trader perspective, yeah, I completely agree with you. We can give it a pass, don't get into it just yet. But yeah, from an SIP investment perspective, not a bad idea to start investing now if you haven't done already.
All right, start investing now if you haven't done already is a word coming from Kush. And another stock in action this morning, Bharti Airtel.
Yes, Bharti Airtel has also added about 15.2 lakh subscribers in July, compared to about 14.1 lakh new users back in June. Now, Bharti Airtel's share in the overall telecom sector currently stands at about 32.74%. The stock has seen a fair bit of run up. A couple of weeks ago, around 10 brokerages gave a buy call on the stock with a target price of about 1,000, and as a result, the stock touched a 52-week high. Now, over the last month, a couple of weeks or so, we have seen some moderation, but buying activity picking up at the lower end of that range that we are talking about.
All right, and also Infosys down 0.5% this morning.
Infosys is down, but the stock has run up about 10%. It's actually been one of the turnaround stories in the IT pack.
Yeah.
And if you remember back when the first quarter results came out, Infosys was the worst hit stock in the bellwether IT stocks. It was, it corrected by 6-7% or so. The company cut its guidance. There were a lot of concerns about, the revenue outlook for the company. But see, in the last 2 months, it has landed contracts worth about $5 billion or so. So FY24 outlook still remains muted, at least from what that's what brokerages are saying. But FY25 could be a turnaround year for most IT stocks.
Exactly, not just Infosys, isn't it? Infosys is the bright spot amidst the sea of grim in the IT pack, isn't it, Kush?
Oh yeah, for me, this is a story of, as they say, that it's a tale of two halves. If I start from Jan 2022, when the stock made its high, it's just been on a downtrend, and it's actually been a bit of a frustrating, move. Even when the, some of the other, large cap names actually did well, this was perhaps, a rank, underperformer. Now split that and look at, mid-April 2023, when the results were announced, the low was made, and from there, the stocks actually started to make a very strong comeback. In fact, I was one of the few, voices which said that, once this, news is out, perhaps the worst is over and we should start accumulating. And that was at about 1200 odd levels. I still maintain that view. Although I see the momentum coming into the stock once it crosses and sustains above 1500, I would say that, the tide has turned for the better for Infosys, and it's not a bad idea to start looking at it from, an investment perspective. The recovery seems to be on a strong footing, despite the kind of, dips that we've seen across NASDAQ. This stock's actually not really done as bad, perhaps in line with the markets, perhaps some profit booking.
Okay.
But overall, the setup looks strong. I think we should look at it from, an investment perspective, 1600 plus kind of targets, let's say by, the end of the year.
Kush, I also wanted to get your view on the overall IT pack. Now, yesterday there was a report from Morgan Stanley, and it has shared a bullish outlook on some of the bellwether stocks such as TCS, HCL, Infosys. It has also raised the target price. What will be your pecking order when it comes to the large cap blue chip IT stocks?
Okay. First up, I share the enthusiasm. I think that, the IT stocks are ripe for, cherry picking right now. As far as my pecking order goes, we've been very clear, HCL Tech is the top name, then comes Infosys, and now, TCS. Very honestly, Wipro is not something that, we look at, because, once you've got enough of, the large caps in your portfolio, the next stocks that you'd pick are perhaps from the mid cap space in the IT names, like the likes of Bsoft, the likes of Persistent. So I'd move to that. So from the large cap names, HCL Tech and Infosys and TCS are, some of the names that we have.
All right.
Interestingly, there is other names also, if I can take, quick 30 seconds.
Quickly, please do.
Sure. Something like a KPIT Tech, which doesn't fall under the pure gambit of, IT services, but something like KPIT Tech from the mid-cap space is also something that we have on our radar.
So clearly the pecking order is there from Kush Bohra. If you're not picking from the pecking order of Kush, then go for mid-cap IT stocks, and there itself too, he has certain picks over there. But Kush, thank you so much for sharing us that wisdom as far as the Indian IT pack is concerned. One more thing we want your wisdom for quickly. The talk of the town as far as traders in India is concerned, stock market traders in India is concerned, the possibility of longer trading hours, Kush, 6 p.m. to 9 p.m. It's not a reality as yet, but there is arguments back and forth. Some say it's great to hedge risks and all the shocks of the global markets. It's good for that. But others say it's too much work with not enough money.
Yeah, I fall in the second camp because it is too much work for me as well. And I think a lot of us, analysts, traders, we fall in, under that, are of that opinion. It is, a little too much. And we know how taxing 5.5, 6 hours of, undivided concentration can be. God knows what another 3 hours, will do. So yeah, fingers crossed. Hopefully that comes a little later than sooner.
Oh, Kush, we had this conversation with Suyash saying that yesterday we spoke to Mr. Ambarish Baliga and we asked him the same question. He said, "I'm not a trader. For me, this doesn't make sense. It's just more work." And we thought, hey, maybe if we speak to a trader, they'll have a different opinion. Looks like that's not the case. So, Kush, but anyways, it's been a pleasure talking to you. It's always a pleasure talking to you. Thank you so much for joining us. And of course, Suyash, as always, putting the day's market action into perspective. And with that, we sort of wrap up this morning's trading sessions coverage.